Welcome back, everyone. Today's video is probably on a bit of a hotly contested topic, which I was surprised to see that in the most recent poll, there was some significant interest in coal. And so that's what today's video is going to be about, and I anticipate it being very unpopular. And before I begin, just want to be very clear that none of this is investment advice. This is not me suggesting to buy or sell something. This is not me saying it's right or wrong to buy or sell anything. I would contend that these days, coal may be a more detested topic than even nuclear power. This may be because that there's a number of people that think coal may be dying, and that a lot of places are trying to phase their way out of coal. Also, in the more social standpoint, there's a lot of very strong and very accurate opinions about all the damage that coal does to the environment. It is not good for the environment. And I understand this. I understand also that the pollutants kill people every year. Many people every year are killed because of the particulates from coal. Now, I also think that we can't just lump everything together and say coal is bad, because we have to understand that coal does bring it is the only form of power that some people have. And so in that way, it at the very least raises the quality of life for some people in parts of the world that cannot afford other forms of power. Now, this is a very complicated topic, and these are just some of the reasons here that it's tricky to talk about, but I'm going to focus this video on the investment case and some relevant points for the investment side of coal. If you have no interest in investing in coal, that's fine. You don't need to dislike the video and yell at me or anything. That's fine. I understand that. I'm just talking about the investment case. Now, the first thing that is incredibly important to understand, and a lot of people either don't understand or don't care, and that is that not all coal is created equal, even excluding the subsets. Coal can be broken down mainly into two categories: thermal coal and metallurgical coal. Thermal coal is basically the bulk of what gets the bad rap. It's used for heating, power, cooking, whatever. That's thermal coal. And people often will group in metallurgical or coking coal with that and not really notice the difference. Now, what is metallurgical coal? Met coal is what I'll be calling it for the rest of this video, because former is longer, or metallurgical is a much longer word. But met coal is used for making steel, meaning every ton of steel that is made needs approximately 0.7 tons of met coal. That's 70%. That is a lot of met coal. So basically city buildings, skyscrapers that is, wind turbines, ships, cars, trains, high-speed rail. Guess what all of that needs? It needs a whole lot of met coal. So there's a difference. And another thing that's important to understand when looking at coal is you can't just look at the coal price, because there's a lot of coal prices. And so each subset has different uses, different destinations, different origins, and a different set of pricing factors. So keep that in mind when next time you Google coal price, for example. So in a broad and semi-unhelpful question, let's go with the question of, are coal stocks cheap? And this is a complicated question because you have to have a view on the coal prices. And the first thing I would point out when looking at this, and this is incredibly important, is nothing messes you up quite like the back half of a cycle. And this is something I've learned. In many years ago, you buy a stock because it looks cheap, and then you just bought it at the wrong point in the cycle, and the stock goes down a ton, and then it looks less cheap. So that is a big thing to watch out for when just looking at cheap stocks. Now, that being said, if you look at any sector, you really have to pick a metric that you want to look at. You want to look at price to earnings, EV to EBITDA, dividend yield, whatever. You need to know what you're looking for. And so once you have a view on the coal prices and where the coal price is going to go, and once you have a metric, you can look, and then you might come to a highly probable answer, which is that, well, very few people seem to want to invest in coal, and so it might be cheap. Now, I'll get to more on that in a second. Now, that being said, looking at these companies, it doesn't exactly look, to me at least, like they are commanding a premium. They, based on their price to cash flow and different multiples, price to book, they look really cheap. Now, that being said, if coal is dying tomorrow, if all coal is dying tomorrow, well, then they look insanely expensive. But short of that, um, you see some of these stocks that are trading at quarter book, two times cash flow, two times trailing cash flow, maybe five times forward earnings. Whatever metric you want to be looking at, they don't seem to be, well, they seem to be very far from expensive. And I know that some people may think that the market just goes up 15, 20% every year and for infinity, but in reality, uh, we'll see about that. Um, but if you look at the expected returns on some of the things that are priced, like these stocks are priced, over time, you probably have some pretty decent expected returns. And the really interesting thing to me, at least, is that a lot of the met coal companies are just treated as coal companies. So often the companies have exposure to both, but everything just seems to be dumped in the same basket as coal. We hate that. We don't want to invest in that, regardless of if it's used for steel or not. Now, when it comes to demand, the demand for met coal is unsurprisingly related to the economy. Why is that? Well, it's used in making steel. So, steel, economy, growth, demand. And so while a recession could see its price and demand get hit, the longer term forecast has demand for met coal growing at about 1.5%, which I believe translates into approximately 10 million tons of new mine capacity needed every year. And that is significant when you consider the permitting and social acceptance standpoint these days of coal. Forgetting or ignoring or whatever you want to call it, the difference between the uses of met coal and thermal coal. And if you think, well, no, people know the difference. Well, I've seen some people call, um, well, I've seen the news of people who should know better calling a met coal mine a atrocity. And I'm just wondering where, I don't want to get into that. Anyway, thermal. When it comes to thermal, people may be thinking that thermal coal is going the way of the dodo bird. And I would say that you should probably look at some of the longer term forecasts because I think that the death of thermal coal is greatly exaggerated. Even amongst, let's call them richer countries that claim they want to decarbonize. And again, I'm not going to go into specifics here because that's not the point. But a bunch of some countries that claim they want to get out of coal are just building new coal plants now. So it's it doesn't seem to be imminently turning off. And if it did, it would need a replacement. And then that takes us to other places that can't afford other forms of power, as I mentioned before. So it's coal or darkness. And on the supply side, well, unsurprisingly, coal is pretty much stigmatized against, and access to money and the willingness to give these companies money or be in business with big coal miners, it's being fought socially, uh, from the lending side, from every side. So with access to money and permitting and all of the things needed to get new production online, with those being fought at every turn, and and most of the coal companies being trading at multiples that they could put a coal mine into production and maybe make 20%, maybe take huge risks, get on debt, a lot of money, or buy back shares and make 30%, 40% at some of their valuations. Well, it's a tough ask again to try and get more production coming online from these companies when existing production, buying their own shares, buying their competitors to make more money, makes more sense mathematically. So go convince a CFO to spend $500 million or $200 million or whatever when you could just take the make a better financial decision and not do it. One thing that might be a good mile marker to see when the met coal picture at least might turn around is to watch for a potential uptick in steel demand, because it stands to reason that if steel demand were to go up, the demand for met coal and thus the price would follow. So um, conversely, as long as the steel market is more or less in the dumps, it's unlikely that there will be a sudden surge of met coal demand. Now, this is just something that sometimes I watch for in certain sectors when I'm waiting for a signal for something to turn. Now, if you're looking for allegorical, why might this be a cheap long-term investment potential? Well, I'm going to ask you something. Right now, put your hand up if you want to be the owner of a coal mine in 10 years from now. Okay, so now that nobody put their hand up, you might understand why the stocks are priced the way they are. And yet, if you look at what the coal demand is supposed to be in 2030, 2040, uh, someone's going to have to put their hand up eventually. Now, this is not to say that this cheap investment is risk-free. In fact, I believe one of the major threats could be that some or multiple governments decide to try and intervene and prevent new production or shut down production. Now, I don't I really don't think that this would have necessarily the effect that they would hope, but politicians and thinking things through entirely don't really kind of go together in my brain at least, because if they were to shut down local production, well, then the coal would be produced somewhere else. You wouldn't get the millions or billions in local tax benefits to which you could actually do something useful with. Instead, you'd be hurting the local economies. But some don't care because it might look good that they fought a coal mine. Not caring or caring to distinguish that some coal is different from other coal. Also, not caring that they don't actually help the planet because the demand is just filled from somewhere else. But again, I don't think that everybody cares. Now, one thing that I think is very important to clear up, as cheap as these companies look, or whatever multiples the market decides to give them, I don't think that they are likely to anytime soon, maybe ever, receive market multiples. I don't think you're going to see these things trading at 15 times earnings or whatever times EV to EBITDA that some other stocks might get. Why is that? Well, A, they're miners, and B, I think there's going to be, I don't see the public perception or dislike of the industry changing. I mean, maybe you do, but personally, I don't see these stocks getting nice valuations. Now, that's not to say that they can't perform very well. I just think that once this turns around, it's going to be a grind. And I mean, a grind, they're going to look cheap the whole way because their share price might go up a lot over time, mainly through buybacks and big dividends and big profits that uh, aren't fought by the cycle as much because of difficult access to capital. But the point is, I think that you could see these things trading and looking cheap and just looking cheap 1 year and then a few years later it's much higher and it still looks cheap just because, again, I don't think people want to own coal stocks. Now, if the world does want to decarbonize, so to speak, it will need to move away from coal and fossil fuels and natural gas, all of which do have are the sources of carbon emissions. Now, I would argue, again, I'm not going to go into detail here, but this would require much, much, much more nuclear power. But we've seen, or we continue to see, how uh, slowly, carefully people um, move towards or away from that, and how much it gets fought by certain people in power or in public. Now, not all places can afford a new nuclear power plant, and that has to be considered also. So there are some places that will need other forms of power. Now, what forms of power? That's to be discovered, to be discussed. And we really can't know how the future is going to unfold. Maybe there's going to be some innovation in carbon capture, and all of a sudden we can use much more uh, all of the polluting fuel sources of power and still have less carbon in the atmosphere. It's unclear. On the other hand, maybe we all use nuclear diamond batteries. We don't know. This is just looking at some thoughts and not presenting judgments. So as always, this sector is more complicated than just A or B, yes or no, good or bad. If coal is not dying, as I would say at least one subsector is not dying, I would argue that probably both are growing, but if it's not dying, then this could be a pretty cheap entry point. But if coal is dying, or if it's outlawed tomorrow, well, then this is probably one of the most expensive sectors because, well, if there's no use for coal, then yeah. Now, that being said, people have asked, well, are you buying coal stocks? Is this the bottom? Are they cheap? Are they cheap? Are they cheap? And yes, they are insanely cheap. Yes, I can see the potential and the asymmetry, and yes, I can see how what's probably going to happen. Although personally, I do think that they have yet to find their floor. I think actually in the near term is what I said recently, very recently, that they probably trickle a bit lower. Now, I cannot stress enough how ridiculously cheap they are. I just think that with the shift of last year and the coal prices going lower, there's a few of the companies that may have had a class of shareholders who thought, well, this is incredibly cheap. Look how much money they're making, et cetera, et cetera. And then the coal price went down and they looked suddenly less profitable. So they probably may, in my view, need to find whatever cheap valuation they're going to trade at, and that could be lower, is what I see. But again, if you're talking about money making potential and cheap investments, oh yeah. Now, while I outlined a bit of the reasons, mainly seeking new investors, new thesis, why the stocks might be heading lower in the near term, I would definitely not be shorting them at this point because I do think that lower is the higher probability near term call. But if you're looking fundamental wise from a pricing point, the asymmetry is definitely to the upside. Now, if one were to be liking this investment, I don't think that this is an unreasonable point to start scaling in. But again, if someone were to be buying or scaling into the investment, they would have to know their thesis because if there's some near-term economic slowdown and there's a few quarters where these companies aren't making money, what do? Because if your thesis is short-term, well, then you have to have a plan versus if your thesis is, well, in a decade or 5 years or 3 years or whatever, these companies are cheap based on that, well, then that's a different thesis. And it's very important when you go into investment, especially something like this where there could be some unexpected numbers, know what your plan is and what you do. Now, in conclusion, for me, many of the stocks do look very cheap. This does seem to be an extremely hated sector, and but all of this is dependent on if coal is an investment that's right for you, if you want to or don't want to, because I completely understand that it's not something that everyone has interest in. And so with that, I will leave you for today, and I hope everyone has a great day.